Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. I love Mondays. I miss you over the weekend. Maybe I got to do a weekend show, but let's see what's going on today. We got the Dow down about 40, but we got the NASDAQ up about 100. All right, so the market, a lot of people were calling for a Black Monday. Everybody said there's going to be a Black Monday. We're in the month of October where crashes do happen, but today was not a Black Monday. Now, we started off much lower, and then we rallied higher today. Okay, so you could have bought the bottom, and you'd already be up a lot of money. Maybe by the end of the day, we do get a Black Monday, but I don't think so. We got a lot of support right now. Okay, so the S&P has come down, sitting right on the 200-day moving average, right? And it's going to bounce off of that. It's going to get a rebound here. Now, eventually, I do believe there's going to be a crash, but there's also support on the weekly. The weekly chart of the S&P, the 50-day week, 50-week moving average, a lot of support right there. Now, in order to get a crash, we're going to have to break through those. And eventually, I do believe we're going to break through those. I just think that's pushed out to next year. I don't think we're going to get a crash right now. Now, you'll notice that they came in this morning, and once we had that dip, everybody came in, started buying the bonds. Well, somebody came in, some big buyer, right? But here's the thing. They really started to buy the junk bonds. The junk bonds just exploded higher after they dipped this morning. Then they exploded higher. This is pushing the stock market up, and we're going to get a bounce from it. That's my take. Your take may be completely different. Eventually, we're going to get that crash, but not quite yet. All right, let's get over to the real estate market. Now, apparently over the weekend, all the big chiefs, they got together and they had this powwow, right? These are the big chief economists. Now, I'm an economist, but I'm not a big chief economist. Don't even know what that means. But they got together, right? They got together, the Realtor.com, they got the Zillow, they got the Redfin, they got the First American Title, they got Remax. They all got together, all their economists, all the big chief, and they all came to the exact same conclusion, which I find amusing, that house prices are going to go up. They're not going to crash. The crash is over. It's not going to happen. I got this all wrong. Things are only going to go up from here. Now, you think about that, to get like 5 or 10 economists to come together and all of them to agree that the housing market's going higher. There's something suspicious there. You can't get 2 economists to agree on anything, but they got 10 economists, 10 big chief economists to agree that the housing market's going higher. Let me think about that. Oh, they all got skin in the game. They're all in the real estate industry trying to pump it up, trying to get you to get in there and buy a house. Hurry up and buy, man. It's going higher. Look at what we got. We had Lawrence Yun. He's the big chief at the National Association of Realtors. He says the housing recession is over. It's over. The housing recession has come to an end. And I might agree with them because it's entering a depression. It's over the recession. We're going into the depression. Now, of course, he sees it the other way. The recession's over. We're going higher. Now, his philosophy is it's over because we're getting close to the price Billy Bob sold at. Billy Bob sold that here, and we're almost up to record highs again. But I don't think we're going to get there. Billy Bob's a genius. The market's coming down lower. Now, we got Skylar. She's the big chief at Zillow, right? Now, Zillow, they don't get anything, right? But let's give her some credit here. She's the big chief there, and she says that 2024, we're going higher because there's not going to be a decline. Of course. Why? Well, no inventory. That's what she says. Now we got Daniel Hale. Daniel Hale, the big chief from Realtor.com. She sees these 8% mortgage rates as a good thing. You see, the cost of financing just in the last year has gone up about 13% because of the rates. The rates are up at 8%. Now here's the funny part. She thinks if they go up to 10%, that houses will go even higher. How do they get this? What economics school did they go to? Now, I get it. I'm just a little chief. I'm not a big chief. And I'm an economist, and nobody wants to hear my opinion because it's not popular. My opinion, we're going to drop about 40 to 50%. But it's not popular. Look at the big chief from Remax. He came out and said there's tremendous demand for houses. The millennials want to buy, and that may all be true. But can they afford? No, they can't afford because we're at record unaffordability. People don't get this. Now they say that the market cannot fall. You know why? Because the homeowner has this strong balance sheet, right? Their balance sheet's strong. Now, if you're a homeowner, is your balance sheet stronger now than it was last year? Maybe it is. I mean, I think most homeowners are watching the expenses go up and their balance sheet is getting worse and worse. They're seeing the inflation just ravage that balance sheet. But according to all these big chiefs, we can't decline because the homeowner has this strong balance sheet. There's no more risky mortgages. Now, I think every mortgage is risky. They lose their job. As soon as they lose their job, that becomes a risky mortgage. But Mike, nobody loses a job in my area, and that's fabulous. But in my area, the layoffs, they're starting to pile on top of each other. People are losing their job everywhere. They're looking for work. Not a lot of people hiring yet. We'll see how long that plays out, but I think this is going to creep over to your neighborhood. And I think there will be job losses. I think the mortgage does become risky, and I think there'll be a lot of foreclosures spiking up over 100,000 a quarter. If we're in such great times, why are these 100,000 people being foreclosed upon? Can't they just sell the property and get their equity out? No. Why? Because they're already underwater. 1 million homes underwater. Look at these. I understand. I'm not an expert, right? I'm an economist. I'm a real estate broker. And neither one of those things make me an expert in anything, okay? Let's get that clear. But my take is we're going to come down. We're going to come down about 40%. Now, why do I say that? I see the number of listings right now increasing in September, increasing in October. The number of listings going onto the market is increasing the inventory. And it's a really strange time of year for listings to be going up. The listings don't go up in this season. This is not the selling season. They go up in April, May, June. They don't go up right now, but we're seeing listings going up. That's interesting to me. What that tells me, it tells me we got a lot of desperate sellers out there. I think sellers are desperate. I really do. I think that their balance sheet is not as strong as all those big chiefs will tell you. I think their balance sheet is in trouble. They need to get money out of their house. They can't refinance because if they do, they go from 2.8 to 8%. So they get the HELOC up around 9-10%. They're in trouble. The homeowner's in trouble. And these are coming onto the marketplace. Now, what I used to do when I used to go out there and make my money flipping houses, buying, flipping them. Okay, so what I'd do is I'd look for a vacant house. Okay, so when you're looking for houses, everybody, all my clients, they want to call me up. Mike, I really like this house. Well, how long has it been on the market? It just came on yesterday. Can we give them an offer like 20-30% below? Well, no, it just came on yesterday. They got a lot of hope. Look for things that have been on 30 to 60 days. Look for them, that ones that are vacant, because those people have a big headache, right? They're paying on their mortgage, but they got a vacant property just sitting there. Go out, make them an offer, 20, 25, 30% below their asking price. Now, what freaks me out is when they say yes, like, oh man, I don't think I want it at that price. Maybe I got to go down to 40%. But that's how I used to find deals out there in the real estate market. And they're starting to become some deals. Now, all these big chiefs, they write this article, where all these experts say we're going up. Look at, you just changed the names. Just change the names and you got the same article written in 2007, 2008. Believe me, they're clueless then. They're clueless now. You can take their advice. They're the experts. I'm not an expert. I'm just a real estate broker. Okay? But I'm telling you, I make my clients sign. If they want to buy, they have to sign a disclosure. It's going to go down 40 to 50%. You can't come and sue the dumb real estate broker. You just can't do that. All right. Now, today I want to talk about something. Now, you can turn the channel off if you got a weak stomach. You know, a lot of people have a weak stomach. They don't want to hear this stuff. And I understand that, right? I understand. I get that. This is real world stuff. This is things that you got to know about. All right. So the median household income, right? Okay, $76,000 in 2021. Well, it dropped down in 2022. Why did the median price income drop from 76,000 to 74,000? It dropped about almost 3%, right? Okay. And this year it's going to drop again. Why is the median income of a household dropping? Now, at the same time, the government is printing trillions and trillions of dollars. Shouldn't that prop up the income? Okay, now I know you guys like my high-tech charts. But here's what's happening. They're stealing your money. This is just in the last 3 years. The last 3 years, the purchasing power of the dollar has dropped 20%. 20% just in the last 3 years. Okay, now what does that mean? It means they printed trillions and trillions of dollars and the purchasing power is going away. When they print trillions of dollars, they steal your money, they steal my money, and it's total theft. It's theft from your savings. It's theft from your income. It's theft every time you go out and buy something. Look, they are blatantly stealing our money. Now, how long are we going to put up with it? Look, if someone came into your house, let's say a thief knocked on the door and they said, hey, let me in. Don't worry, I'm only going to steal 20% of your stuff. I'm going to leave you with 80%. Would you let that guy in? No, you'd slam the door. Why aren't we slamming the door on these people? They're stealing our future. They're stealing from our pocketbook. They're stealing our bank accounts. It's getting ugly. I don't know how long you want to put up with it. Maybe we want to keep going like this. Look at here since 1980. Here's a chart since 1980. They've been stealing then. 70% of the money was stolen from us, right? This is because they print money. That's all they can do. They print money, they print money, they print money. Look at the average new car loan, $750 a month, right? And the percent can be as high as 14%. The average used car payment, $540 a month. And that rate can be at 21%. You might as well go out and put the car on your credit card because your credit card might get you a cheaper interest rate, and all credit cards are over 20%. And let's talk about those credit cards, right? They're at a record high, never been higher, right? Because people don't have money, so they have to put it on their credit card. Okay, what's happening with the credit card? Default rates. Since 2021 to 2023, the default rate on credit cards has doubled. Why? Because people don't have money to pay off the credit card. What about student loans? Those just came back online, right? Average student loan, about $400 a month. Look at food costs up 10% year over year. They'll sit there and look you in the eye and tell you inflation's at 4%. They'll lie to you. They'll steal your money. Look, if they print another $1 trillion, that means they're stealing from you. And they do this on a monthly basis. We have a run rate right now this last month, almost $1 trillion in 1 month. I mean, obviously it's not sustainable. Obviously it's going to blow up. Obviously we're going to have to build from the rubble. And I beg you young people, look, I'm an old guy, I'm going to make it out, okay? But you young people, you want to build back better, right? I mean, get rid of the Federal Reserve. Do you realize the 100 years before the Federal Reserve came into existence that your purchasing power doubled? It went up, it doubled. Okay, that's the 100 years before. And what did it do the 100 years since the Federal Reserve was instated in 1913? Your purchasing power, the dollar bill has lost 98% of its purchasing power. Now, you think that's a coincidence that the 100 years before, the purchasing power doubled, and once you started the Federal Reserve, the purchasing power went down by 98%? You think that's just random numbers? No, they're stealing your money. They're stealing my money. They're going to continue continue to print because that's all they can do, and they're going to print into oblivion. The thing will crash. We have to rebuild at that time. Get rid of the Fed. That's just my take. Look at your standard of living. Your standard of living is going down. Look at Weimar Germany, right? Okay. Originally, when it first started out, people weren't worried about inflation. No, they weren't. Why? Because the stock market was going up. What's our stock market doing? Look at the stock market. Houses were going up. What are houses doing? Look at they're at Billy Bob's price. They're at record highs. Look at people weren't worried about the inflation because they saw the markets going higher. What happened to Weimar Germany? Everything collapsed. The dollar became worthless. Their currency became worthless. Our currency is going to become worthless unless we stop these people. We have to get them out of office. We have to stop the Federal Reserve. Look, this is just my take. You can go out there, put your head in the sand like all my friends do. They don't want to hear this stuff. And that's why I'm glad I got this channel, because I got you people. You're my people. You get this, me and you get this. They're destroying the dollar right in front of our eyes, and we're letting them do it. We're guilty. We're letting them do it. Yeah, go give that money for the war. Janet Yellen says we can afford 2 wars. If a third one starts, we can afford to finance 3 wars. Someone ask her where the money's coming from. It's coming from me and you. They're stealing it. Blatant theft, stealing it. It's got to stop at some point. Look, it may be too late. Maybe we just let this crash. Maybe we just print into oblivion and then rebuild without a Fed. That's just my take. It's Monday. I got a little carried away on the rant today, but I hope you enjoyed it. If you did, give me the thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Enjoy your day. Bye-bye now.